of the Structural Timber Association and also Chief Executive of Constructing Excellence in the Southwest and the Midlands. And it's our pleasure to host these regular Friday sessions. And I'm now joined by my CE colleagues from around the UK and also from the CIOB in the Southwest. So there's a team of us now that are responsible for bringing these Friday afternoon webinars to you. I'm delighted to say today I've got a very good friend of mine, Alan Willan from Glenigan, who's going to be presenting. More of that later, but I'm going to hand over to another good friend of mine, Howard Betts from Leaders Meets, who's going to take us through the rules and regulations for today. Thank you, Howard.
Thank you very much, Andrew. Good afternoon to everyone. We're going to be thinking a lot of you are very familiar with, but for those of you who are not, you can get into Slido two ways. You can either go to slido.com and enter the code, which is LM300421, which is today's date, or you can scan it into the QR code. We're going to be using Slido three ways today. First, we'll have an opening poll, which I'll bring up in a minute. We're going to be using it for questions and answers. So if you have any questions, please do use the Q&A in Slido. And thirdly, we will have a feedback poll at the end, which we'd appreciate you giving us so that we can learn how to improve and also the feelings about today. So I think without much more ado, I'm going to go straight into the poll. So the poll is 4 questions. The first of which is, to date, in which sectors, e.g. housing, could be commercial, have you seen the strongest recovery in workload since last summer? You can complete this poll during the next few minutes, as we're not going to be giving the results until after the talk. So let's go to the second question. Which sectors, e.g. again housing, do you expect to perform strongly over the next 12 months?
Sorry, Howard, can I just make a quick point? When you said e.g. housing, I think from Alan's perspective, it would be a good idea if you're going to say housing as an answer, whether you could distinguish between private or affordable.
Yeah,
so
of course.
Private housing, affordable housing, commercial, education, health, retail, etc., etc. But if you could be specific, I think it would help, Alan. Sorry to interrupt.
No, very good point. Thanks very much, Andrew. Okay, let's go on to the third question. Which sectors are of greatest concern over the next 12 months? We've got 3 people who've completed the poll so far. So let's go to the last question. Do you expect the pace of the recovery to be affected by the availability and cost of skilled labour or the availability and cost of construction materials? So I think what we'll do is let people take the poll. I'm now going to hand back to Andrew, and many thanks.
Thank you, Howard, very much. Just on that last question, I think we should say, do you expect the pace of recovery to be most affected by? Because I've just done the survey and it's an either or, because I actually thought it might be both. So it's an either or, ladies and gents. So if you could choose the one that you think is going to be most affected by. Okay. Today, I've asked Alan if he'd come along. Alan and I go back a long time. Glenigan have got a relationship with Constructing Excellence in as much as they're responsible for the KPIs that we produce each year. And Alan is the economics director with Glenigan. So what we're going to hear this afternoon is an economist's view on the road to recovery, which I think is going to be very relevant and very interesting for all of us. And I'm sure that will provoke questions and comments. So what I'd ask you to do, ladies and gents, as you listen to Alan, if you do have any questions, please use Slido, as Howard's indicated, rather than the chat box at the foot of this Zoom call. So anything you'd like to ask Alan later on, please feel free. But Alan, thank you so much for giving of your valuable time to be with us today. I'm really looking forward to what you've got to say. I'm going to mute myself, you'll be pleased to know. Turn my camera off and the stage is all yours. Thank you, Alan.
Okay, thanks. Okay, I'm just going to share my screen here as well. So I've got a few slides to show everyone. Hopefully that's now on screen. Yes, thanks, Andrew. I'm Alan Welling, as you said. I'm the economics director at Glenigan, and just for those of you perhaps who aren't familiar with Glenigan, where our main office is down in Bournemouth, and we are a construction data company. Basically try and track all of the construction projects that are entering the development pipeline, really from these days, from when the land's being identified in SHLAs and other local plans, all the way through the planning system, planning approval, contract award, start on site, and actually through to completion. Now, obviously, the primary purpose of that is that our subscribers use that to find out about specific business opportunities for themselves, depending on, and we've got a variety of people coming from all different parts of the construction supply chain, effectively, that's of use to them to help find specific opportunities. But because we're tracking all of these projects, and they're all geocoded, sorted by type of work, with sectors, parts of the country, and so forth, and the value of the work, from a strategic point of view, they're a fantastic resource as well to really track what's happening in the wider construction industry and where the market's likely to go over the next 2 to 3 years. And that's my role, effectively, with my economics team, is to try and take that data and provide some strategic insight either on the overall market for the industry as a whole and for customers, and also we do some bespoke work for individual customers as well, drilling into the data that really sort of to tailor it to their own particular market requirements. As a company, we've recently changed hands. We were formerly part of a listed company, the Essential Group, and we've recently just been sold to a Swedish company called Big Factor, which is a very similar firm to ourselves in terms of market data and analysis across the Scandinavian countries in particular. So it's a very logical fit from that perspective. Okay, from what I'll do really is sort of start perhaps by revisiting our forecasts, our latest forecasts, which we originally published right at the sort of tail end of last year, sort of end of November, beginning of December. At that point in the market, we, as a UK economy, we were sort of teetering on the verge of going into what was the second lockdown. And so we were really trying to assess what the implications were for the UK economy and also for construction going forward. Now, obviously, over the last 2 to 3 years, we've had a period of heightened political and economic uncertainty that's clearly affected the UK construction as well as the wider economy. And I think that's quite interesting when you look at the data, for example, the longer term trend data on the chart there, which is for the overall value of what we call underlying project starts. So it's leaving out the really big projects over 100 million, so which can distort the picture, particularly on a quarterly or even particularly a monthly basis. You can see there's been a sort of a general drift lower, really, since sort of 2017 onwards, and then obviously in 2020 when and actually the tail end of 2019 when we had obviously a lot of uncertainty around Brexit and also the sort of a general election, snap general election, started to see recovery in Q1 of last year, and then we got hit by the pandemic. So we had this dramatic fall in workload, and it's really trying to chart the path of recovery over the next 2 years. It was the challenge, and remains a challenge when you come to look at the sort of unpicking those political and economic issues that are going on in these very sort of turbulent times. Now, as it happens, as a result of that, we came up with our central forecast, which is our anticipated route of recovery. But we also included two sort of alternative scenarios, a sort of best and worst case scenario. And really things have played out pretty closely to our central forecast to date. So that's mainly what I'm going to be talking about now. The worst case scenario, for example, was if we had a lot more Brexit disruption, and had effectively had no deal whatsoever. And also if the UK economy went into a renewed national lockdown, which affected construction. Now, as it happens, we've had that national lockdown 2 and 3, but and I think this has been the crucial thing, and this is kind of what we anticipate in the central forecast. Construction sites have been allowed to remain open and progress during that period. And obviously, there's been breaks and restrictions on what they can do on site, but nevertheless, they have. The industry, I think, has really responded well and been able to drive forward and been a key part actually in the wider UK economy during the last 9 months, effectively. So it's a positive story to begin with. So, okay, how do we expect things to move forward? If we look at the recent bellwether signs, this is interesting findings from the first of a series of quarterly trade surveys we're doing for the National Federation of Roofing Contractors. The next one is actually going to be due to be published next week, so it's a shame I can't talk about that quite yet. But if you look at what's happening in the fourth quarter, we can see that, as I say, I think this is useful bellwether because the roofing contractors are involved right in the middle of the construction process. It shows how well sites are responding. Obviously, I don't cover the civil side of things, but I think otherwise they're quite a useful barometer of what's going on. And you can see there was been quite a strong bounce back in industry workload. These are the balance of firms that are saying things have increased or decreased in terms of workload or new inquiries, compared with, this is the fourth quarter, compared with the third quarter of last year. So it's not a percentage growth figure, it's a balance of respondents. But you can see that actually the areas where there's been a widespread improvement in activity initially have been particularly around repair, maintenance and improvement work. I think when we see the latest survey results in next week, I think residential work, you'll see new residential work is also very much in the forefront there, is having rebounded quite well in the first quarter of this year. So it's a positive picture, but other areas, perhaps commercial new build, have been slower to pick up. And I think we'll be able to unpick some of the logic behind that and explain why that does seem to be perhaps playing out as we'd anticipated, as I go through and talk about individual sectors in a little bit more detail. So perhaps I'll start with the two residential sectors, private housing and social housing. Clearly, both of those are actually perhaps one of the worst affected sectors during the second quarter of last year by the site lockdowns, and they were perhaps a little bit slower to unlock, really because it took longer to be able to put safe working practices in place for some of those sites by the nature of those sites. But nevertheless, things have picked up really well. And I think what we were looking at really is, if you look at the fundamentals going forward, is we've got a really strong supply chain as well. So if we look at private housing in particular, for example, yes, the supply of new housing securing detailed planning consent did fall away last year. There was some disruption, but if you compare that with the fall off in project starts, it's been relatively modest, and it has started to come back already. Actually, it been quite encouraging. There was a lot of concerns go back to last year that planning processes would be frozen. But I have to say, a lot of the local planning authorities were quick to move, have online planning meetings and so forth, and move projects on forward through the planning process, which is encouraging. In addition to that, we'd already seen strong growth, as you can see, in the planning approvals and starts really since the beginning of the decade. So there's a strong supply and stock of projects that have got detailed planning consent and can move on site if the confidence is there to take those projects forward. And certainly from the demand side at the moment, there is strong demand. In fact, it's been quite amazing, the sort of the mini boom that we've seen in the housing market since really since last summer. Clearly during the second quarter, the housing market, the general housing market, went into deep freeze with estate agents and others closed. But once they reopened, actually demand has been strong. But it's been a shift, been driven by a number of interesting factors. So overall demand has picked up. If you look at approvals for and sort of mortgage lending and transactions for last year as a whole, yes, they are down on the year, but a lot of that's related to the second quarter of last year. But there has been a strengthening trend there, and house prices certainly until recently have been on a strengthening rising trend as well. Number of factors. Firstly, there was pent up demand from prior to that, during the lockdown, the first lockdown in the second quarter. In addition to that, the government moved to sort of build confidence, and we've had the temporary reduction in stamp duty, and that really has sort of buoyed the market and encouraged people to think about moving house. To the extent that actually that when we had the budget, prior to the budget, there was clearly concern that actually we could face a cliff edge. The government has actually moved now and gone for more of a tapered approach to later in this year. So whilst I think that taper will have an impact on the pace of future growth over the next sort of 24 months in terms of housing transactions and activity, it's nothing like the concerns that we had previously. In addition to that, there's been some sort of structural change in demand in the market, and that's caused sort of hotspots, particularly in sort of market towns and sort of out of the city centres, as a lot of people have been looking for more green space, being also aware of the restrictions of during the lockdown. I've had a desire for that, more garden space, more access to open space generally. And in addition to that, the lockdown has also caused more people to work remotely, and I think that's accelerating perhaps what was an underlying structural change quite significantly. But I think going forward, a lot more people will be working on at least on a part-time basis remotely, and perhaps travelling into the office a lot less frequently than they were previously. And I think that as a result of that, it's changing people's perceptions about where they want to live, and that's helping to buoy, as I say, demand for those sort of market town type and more rural locations, and for larger properties for those who can afford to move. So that perspective, that's pushing up recorded transactions, which is why you're seeing a rise in not only transactions but in property prices. But I am concerned that other parts of the industry, of the market, may be faring less well, particularly those who are perhaps trying to move out of apartments, for example. So the demand for those it's going to be sort of less anyway because of that structural change. And on top of that, we've got the whole leaseholder problems in terms of sort of post-Grenfell, which again is a potential block on activity in that part of the market. So real structural shift in change, which offers differing opportunities, I think, for the industry in terms of where the demand for new housing is going to be going forward over the next 2 years. And again, I think regionally, a shift away from London and the southeast towards the south. I think the southwest being strong, but also towards the Midlands and the north of England as well. They've been strong markets regionally. Moving on to the social housing sector, which actually we expect to be a particularly strong growth area over the next 2 years. Within our statistics, we include student accommodation. I think that's got to go somewhere, and I think it's a heritage thing. Obviously, most of the student accommodation that's being built now is not being built by universities; it's being built by the private sector. And you can see that's the blue-grey sort of data at the top of each of those bars, you can see how that's fallen off quite dramatically during the course of 2020. We do expect that to recover, but not to this, to pick up to the same extent as it was, and the level of activity it was prior to 2020 and the pandemic. I think there's a couple of reasons for that. I think we were already entering something of a period of consolidation within the sector, with investors actually looking at the existing state and trying to rationalise and purchase existing properties to consolidate. In addition to that, I think what overall student numbers, there's heightened uncertainty there about the growth, certainly in the near term, and in UK student numbers. And alongside that, particularly post-pandemic and post-Brexit, actually the demand for space at UK universities from overseas students is likely to be more vulnerable and more subdued as well than perhaps it would have been otherwise. So for that reason, we've got a weaker growth prospect within that sector. But there are, as I say, a number of firms that are still looking to invest in that sector, and we do expect it to recover from the lows we saw in 2020. However, it's the affordable housing side that we expect to be really strong. There's been a lot of restrictions for a number of years on both in terms of capital funding available from central government to RSLs and others to develop new social housing. In addition to that, there's been restrictions on their ability to A, increase rents, and then B, use that income stream to fund additional private sector borrowing to take forward new developments. Both of those we expect to be relaxed. Well, one's already been relaxed, and the other expect additional funding to come forward during 2021 and 2022. And certainly the development pipeline already, looking at our data, has been strengthening. More ourselves are taking forward developments. Often there might be a sort of mixed tenure developments with an element of cross subsidy, with perhaps more shared ownership as well being a feature. But nevertheless, we do expect that to be a strong growth area during 2021 and 2022 for the industry. Moving to sort of the private non-residential side of things, and first picking up on the industrial sector, which is a tale of two halves, effectively, or two cities. Firstly, the manufacturing side, I think, is going to remain under pressure. Clearly, there's been a lot of disruption over the last year, and a lot of uncertainty ahead of us finally leaving the EU at the beginning of this year. And all of those, I think, are going to be a negative break on demand for additional manufacturing capacity in the UK. As a result of that, we expect having the manufacturing activity starting in terms of project starts having fallen back last year to remain expected to remain pretty subdued over the forecast period. In contrast, the demand for warehousing and logistics space is expected to grow really strongly over the next 2 years. It had been an important feature and driver for earlier growth in the market in this particular sector, and I think this is going to be even more so over the next 2 years. Very much driven by the need for and demand for more logistics space. The pandemic has really accelerated and boosted what was an underlying structural change in the market in terms of consumers' retail habits and the move to online retailing generally. I think the graph on the left there really, I think, illustrates that trend quite dramatically. It's the percentage of total retail sales that were basically going online, and you can see that it's been relentlessly growing, really, over the last sort of 10 years or so, and then really just took off quite dramatically during the lockdown and the pandemic. Now, I think there will be a little bit of retrenchment, not least as shops reopen. People will be going to shops as well, so that percentage figure will fall away. But I think if you look at the growth rates that you see, or you can see on the right-hand side there, in terms of different types of retailing, you can see that there really has been really strong growth in retail, in online non-store retailing since during the course of 2020, year on year. And even when, if you look back at last year, when things did open up during the autumn, yes, there was a fall off in the pace of growth, but it was still substantially up on where it was a year ago. I think effectively the lockdown has introduced internet retailing to perhaps a lot of consumers that wouldn't have done it previously, certainly not on a regular basis. And I think it's caused, it's cemented that change in perhaps shopping habits or shopping options, and I think that will continue over the longer term. Hence the demand for a lot more logistics space, and a lot more established retailers are also taking an increasing proportion of their sales online themselves as well. So there's a clear shift in strategy from retailers. The other thing I just mentioned there, actually, I thought was quite interesting, and I've put on as a sort of blue line there, which is comparing sort of overall non-grocery store sales during the course of the last year, with specifically the household goods stores, sort of white goods and so forth, and that has performed better than non-grocery retailing generally. And I think that was quite interesting, because it shows that actually during the lockdown we have as consumers we sort of refocused on where we are, which is our homes, perhaps more than we would have been in the past, and we've been spending a lot more on our homes as a result of that. And I think that has a knock-on effect in terms of what's happening in construction as well. Going back to the NFRC survey, which showed that really nice buoyant growth being in domestic RM&I work, that very much fits in with that pattern there, that people are looking at extensions, looking at general improvements to their homes, and also as they're trying to expand their homes, maximise the space they've got available, particularly if they're looking to do more home working on a sort of a more permanent basis going forward. And all of that has helped to drive growth within our industry, but also in, as I say, household goods generally. So what's happened in other? Oh, well, I skipped a slide somewhere. Okay, I think I have. It's dropped off somewhere, but I'll the other thing I want to talk about was other commercial sectors as well. And again, there's a sort of a shift there. We've seen a sharp fall off in activity over the last during the course of 2020 due to the pandemic directly, but differing patterns of recovery anticipated in terms of the types of commercial work that are going to happen over the next 2 years. Taking the commercial sector in terms of commercial office space first. Again, that move to more remote working on a sort of permanent basis, I think offers some interesting challenges and opportunities for people working in the commercial office sector. And I say opportunities because I think, whilst I think the overall demand or need for office space per se is likely to be lower going forward, the location of that office space is likely to change. I think perhaps there will be more demand in other parts of, outside of our major city centres, more sort of regional, sort of local hubs for people to work in, where they're trying to bring together people for sort of the creative need for people to get together and collaborate. Alongside that, whilst firms might be looking at the amount of office space they have and think actually it's more than we need, they'll also be thinking actually it's not laid out and set out the way we need it either going forward. So I think we're going to see a lot more refit and refurbishment opportunities coming down the line, and I think we'll particularly see that sort of relatively soon in the near term. So I think that's going to be a strength and a growth area over the next 2 years as firms look to remodel their existing workspace to allow more collaborative areas for people to meet and really to drive forward the real benefits of getting people together, whereas perhaps the more routine work that you'd have your desk at, you might be doing that remotely at home and then coming in for those more collaborative meetings and so forth when required. Alongside that, if there's less space, it could be a lot more subletting and subdivision. Again, that's office space. Again, that's going to create opportunities for the industry. I think the new build side will be slower to recover as a result of that, but will inevitably pick up over time. Not only that, if there's a reduction in overall office demand, that may well also throw up new opportunities into repurposing existing commercial office space, whether that's as sort of residential or other uses going forward. The retail side of things, interestingly, we've seen quite a bit of a rebound in retail starts over the last sort of 3 months in our data, which has been surprising, but it's from a very, very low base, and we don't expect that to be sustained. I think given the structural change that's going on in the market and in the retail sector, I think it's seriously going to be an oversupply of retail accommodation and space. So I think we're going to see a lot of consolidation going on in that market as more and more of our retail purchases are permanently move online going forward. And that leaves the hotel and leisure side of things. And certainly the hospitality industry has probably been the sector that's been hardest hit across out of the UK economy over the last 12 months, and is still, even though the industry, most of the UK economy is now unlocking, it's the one that's still slowest and last out of the sort of the shadow of COVID. As a result of that, I think it's put a lot of financial pressure on businesses operating in that sector. And whilst a lot of them have, had some strong development plans, and if you look at the development pipeline for hotel accommodation and so forth, it's really positive and was on a rising trend. I think how quickly those projects move forward is in doubt. I think it'll be much slower to recover. I think the first priority for firms will be to rebuild their balance sheets as things move forward. Again, where there'll be sort of bright spots within the sector, though, I think areas such as the capital, for example, which is heavily dependent on demand for overseas travel and business-related travel, I think that will be perhaps a sort of a particular weak point. Whereas other parts and regions of the country where actually there's strong demand for UK holidays, for example, from UK consumers, they're perhaps going to be faster to return and recover over the next 24 months. So moving on to the sectors on the slide here, which is the sort of the government funded areas. And again, I think here a real positive picture going forward. Government is committed to increasing investment in the built environment. It's all part of its Build Back Better strategy. We've already seen approvals for some really big, high-profile projects really early on in the pandemic. The Prime Minister was fast to give the final approval to HS2, for example, to make sure that was moving forward. This data here is looking at, it excludes those really big, high-profile projects. So it includes projects, schemes under and contracts under 100 million. But even here, you can see there's generally a positive picture moving forward. Yes, things dropped back last year, but we are going to be building back. And as you can see from the chart there, if you look at those sectors as a whole, back to 2019 levels this year and moving beyond that next. So outperforming the private sector areas really over the next few months. In education, we anticipate that actually it's going to be secondary school building projects that should offer the greatest opportunities. If we look at the charts here, you can see that actually there's been a long-term growth in secondary pupil numbers, which is set to continue over the next couple of years. But we haven't yet seen the investment in the additional capacity for those pupils, particularly in major urban conurbations. there's clearly a squeeze there. I think it takes a long time for local authorities to gear up. There's a lot of restrictions and red tape that they need to clear before they can deliver additional school places, whether that's on existing sites or even more so in terms of building a completely new school. And I think that's really been held back. I mean, I think we saw a similar picture 5 years ago now in terms of primary school education, where, as you can see from the chart there was a strong rise in pupil numbers. But it took a long time for local authorities, A, to wake up to the fact there was an issue, and B, then to put in the additional capacity. I think we're seeing the same thing now with the secondary education side, as that cohort moves through their school years. So I think that's going to be a particular growth area going forward. The FE colleges as well, a strong pipeline there, and I think that will deliver a rise in starts during 2021 and going into 2022. The university side, it's going to come back and recover a little bit this year, but we are a bit more cautious about the pace of recovery. It's been a strong growth area for a number of years, so there's a lot of investment has already gone in and been made by universities. A lot of their balance sheets have come under some strain as well as a result of that. In addition to that, as I was saying earlier on about perhaps the prospects for growth in student numbers and university fees, and particularly for overseas revenues as well, I think that's going to act as a bit of a temper and a brake on the pace of growth and investment in that particular part of the education sector over the next 2 years. So then the other sectors I'd pick up on would be health, which we already saw double-digit growth in health spending last year, and there's particularly buoyed by the investment in the Nightingale hospitals. But behind that, there's a substantial increase in government funding, A, for the NHS generally, but also for capital projects within that over the next 5 years. And I think that will help to drive growth within the sector over that period. There was an initial slow start there in terms of the NHS Trust had very few projects in the development pipeline to bring forward. But we are seeing an improvement in that pipeline of projects under sort of pre-construction development. And that will flow through to lift health starts over the next 2 years. And then on the civil engineering side, as I was saying, government has already been green lighting a lot of the major projects over the last few years, like HS2, but is also committed to driving forward greater investment in improving the road network. Initially, all of that's been going into sorting out repairs and potholes and so forth, which is a perfectly logical way of doing it. It's, you can get directly into the economy quickly. But over the medium term, we should be looking at perhaps more major schemes coming forward, either at the local authority level, but also through Highways England. And alongside that, obviously, we've seen some major investment strategies coming forward in terms of the 5-year plans for the water industry, which kicked off last year, and for Network Rail, which again, it's a 5-year sort of program that started in 2020, and these things tend to build up over the first 2 or 3 years of their program. And then finally, obviously, on the other part of the infrastructure side, there's a lot of investment being promised to roll out ultra-fast broadband and 5G by BT and by others on the 5G side of things, all of which I think will feed and boost activity within the civil engineering side. So what does that look like overall? In terms of pace of growth, obviously you saw this dramatic 27% decline in project starts last year, but we're looking at strong double-digit growth in 2021, a 17% rise, and 9% during 2022. Now, interesting, you can see that the pattern of activity there, strong growth over that period in terms of areas like education and health. This sort of sustained growth there. Something of a bounce back in retail, but say from very low growth, low base in terms of we had 40% decline last year, and it already on a downward trend prior to that. Similarly, strong bounce back on private housing, but the pace of growth being tempered over that forecast, particularly from sort of the latter half of this year and 2022, really reflecting the fact that let's say that taper in terms of the tax duty relief, stamp duty relief, but also the fact that actually consumer spending and earnings will also come under increasing pressure as we come out of the furlough scheme. The economy start to adjust, and we potentially see a rise in unemployment. I think the interesting thing, though, is if you look back at that graph in terms of the overall value of numbers, got that very strong growth both this year and next year. But even at the end of that, the end of 2022, we're not quite back to the levels we were in 2019 prior to the pandemic. So it's a sustained recovery, and I think that actually broadly fits in with the prospects for the wider economy, where at the moment, if you look at the latest forecast for our economy, and I think the chief executive of Barclays was saying on the radio this morning that we've got fantastic strong growth coming through this year. It's going to be sort of a boom year. Well, it is a boom year in terms of the percentage growth figure, but we just bear in mind where we are at the moment, where you're starting from, effectively. And I think there was also a comment from someone from the Bank of England was saying, yes, we could see really strong double-digit growth over the next couple of years in the wider economy, or really strong growth in the wider economy over the next 2 years. But we'll still be, it'll be towards the end of next year that we'll get back to where we were before the pandemic. It's a very similar picture that we anticipate with construction over the next couple of years. Yes, we can see a really sustained recovery, but within that, but not reaching the levels of previous levels, and within that, some real big significant structural shifts, I think, in the type of activity. Prior to the pandemic, it was very much being a private sector driven growth areas that were lifting overall construction activity, or the main sources of construction growth going forward. Yes, we can see some recovery in private housing, but I think there's going to be a shift there, and it's going to be a lot of the public sector and civil engineering areas that are going to be sustaining the upward momentum in construction activity over the next 2 years. So hopefully that gives a useful overview to everyone, and at that point I'll hand it back to you, Andrew.
Thank you very much, Alan. Very, very detailed look at the economy, both today and looking forward. So I'm sure that was of great interest to all our listeners, so to speak. Would remind you, ladies and gentlemen, I'm going to go through the survey results now with Alan. But whilst I do that, if you have any questions to ask Alan, if you could please go to the Slido reference. If we could stop sharing, Alan, now, perhaps. We'll get Abraham to put the Slido details back up on the screen, and then we'll go through the survey results. So there we go, slido.com, hashtag LM300421, which won't escape your notice. It's today's date. Right, let's go to the survey results, shall we, Alan? We'll have a little chat about that whilst we give people the opportunity to post their questions. So Abraham, if we could go to the survey results, that would be good. So to date, in which sectors, e.g. housing, have you seen the strongest recovery? So we've got blue light, education, defence, private housing, healthcare, housing, residential, private and affordable, HVAC, construction, private housing, affordable housing, research facilities, healthcare, residential, schools, housing, private housing. So actually pretty much across the board, Alan. Any comment to make on that? Are you still with me, Alan?
Yes, I can talk now and be heard. I think it's really interesting because it fits in very much with what we've seen in the dating. As I say earlier on about particularly on the private housing side of things, that's we've seen as quite a strong bounce back in the wider housing market, and I think that's boosted both new housing activity, but also strong growth in RM&I activity, which again we picked up in our survey for the NFRC. So that fits. And as I say, healthcare, we saw some growth there last year in that sector. So that's encouraging. And schools, I think that's encouraging as well. We're actually seeing some improvement that people have flagged up there. So that's
yeah. I mean, certainly, as you know, I work most of my week for the Structural Timber Association, and we're predominantly in the housing market, particularly private housing. And my members are going through a really, really busy period at the moment. Well, I know we're going to talk about one of the issues in one of the future questions, so I'm not going to lead into that. But yeah, my members, after after a couple of weeks of close down last March, they've come back in abundance. So it's really, really, really busy.
good.
Okay, let's go to the next question then, Abraham, could we? So which sectors do you expect to perform strongly over the next 12 months? So we've got housing, health, primary and secondary education, housing again, private housing, education, housing, residential, affordable, private split, depends on development, as above, private residential as above.
Yeah.
And what's the last one? Housing. So yeah, so I think most
more
people,
more of the same, effectively.
Yeah. And you concur with that, I suspect.
Yes, I do. Yes, and I think as I say, you've got education in there. I think the public sector side of areas as well. I think there's an area to watch both for the next 12 months and over the sort of the slightly longer term as well.
My answer to that, Alan, was actually affordable housing, because we're seeing quite a lot of movement in the housing association, but also now councils getting themselves ready to build more council houses, which of course is relatively new. We haven't built those for many, many years, have we?
No.
So yeah, interesting space.
It is positive. I think really positive news.
Yeah.
I think the other interesting thing to be able to see on the commercial, so the office side of things, I think overall I'm cautious about that sector, but I think a lot of structural change there potentially in terms of more, as I was saying earlier on, refurbishment work potentially coming down the line as well, with remodeling of premises. I'll be quite interested in seeing
and I think, as we look at the retrofit agenda, which the government of course have highlighted, and its link with the net zero agenda. I think there's going to be huge opportunities. Certainly, my sector, the timber sector, are looking at massive opportunities in retrofit. So yeah, watch this space. Right, we've got one question in already. If you've got any more questions, folks, please put them in the Slido. But let's go on with the survey for now. Which sectors are of greatest concern over the next 12 months? So here we go. Leisure, higher education, public sector, commercial office space, events, hotels, retail, commercial private investors, and retail. So any comments there? Any surprises?
It doesn't surprise me generally too much. I think that's right. I think the private non-residential sectors are the most difficult. As I say, in terms of commercial, I think might be opportunities on the refurbishment side, but I can understand the general caution there. The higher education I mentioned, I picked up as well. Public sector's come up a couple of times. That I think that's perhaps does surprise me a little bit. Having said that, I think one of the issues there is I think the government's certainly vocally made the commitment there. We did have the delay to the spending review. We haven't got the full comprehensive spending review yet. And really it's a question of rhetoric and reality, where there's going to be a gap there. So I can imagine a little bit of caution on that front. But hopefully, if the government does what it says it's going to do, doesn't always, then I think we should see sort of further growth coming forward in those areas.
I don't know whether I'm like any other people in the UK currently, but I know during the last 12 months, my wife has been, I think, personally responsible for the increase in share price for Amazon. So much so that a few days ago, we had the DHL man knock on the door just to ask if we were all right, because he had nothing for us that day. But, joking apart, when the shops opened a couple of weeks ago and I actually went shopping, I actually thought, I quite enjoy this. And I just wonder whether there's many people that once we're let out, the joy of the shopping experience is actually going to come back. I think you indicated that in your talk, that there's going to be, a slightly depressed Amazon DHL sort of shopping.
Yes, I think it will taper it back. But I think there's been a structural shift there, though. I think it will.
It's going to be a balance, isn't it?
Yeah.
And here we go then. The last question: do you expect the pace of recovery to be most affected by cost of construction materials or labour? And it's the materials. And I think I would definitely concur with that, Alan.
Yes.
We're experiencing significant increase in timber prices, and I know that's the same across the piece. I know my colleagues in the steel sector are experiencing the same, but you've probably got a much wider knowledge of this.
Yeah, no, that kind of fits in with certainly the sort of feedback I've had, and as I say, it fits in with findings from that NFRC survey I mentioned as well earlier on, which construction, yes, availability of skilled labour seems to be a bit of a perennial, but at the moment it's just notable how much of it, how much concern there is about construction materials generally.
Yeah,
and I think it's kind of it does seem to be something potentially something of a perfect storm, in the sense that we've obviously got the recovery from the pandemic, and then on top of that, we've potentially got sort of Brexit as well, which, if nothing else, is partly causing sort of people to rethink how they deliver products into the European market. So we're kind of, rather than being perhaps stuff coming into UK and then getting distributed across Europe, we're suddenly at the back of the end of the supply chain, which again exacerbates the problem. And then you've got the logistics of getting it into the UK and out. There's a whole range of different things, boats getting stuck in the Suez Canal, that can sort of all come together and I think aggravate problems in that area.
And then, of course, you add into the mix the two biggies that we're certainly confronting at the moment: the net zero agenda on the one hand, and then the quality agenda post Hackett and Grenfell with the the building safety bill, and the feedback from those two. So it's quite an interesting place to be, isn't it, at the moment, construction?
It is.
Now then, we've got the questions coming in now, Alan.
Okay.
So we've got a little bit of time. So the first question then: what effect have you seen on the organisations and people in construction sector due to the reduction in activity? So what effect have you seen on organisations, Alan?
That's an interesting one. What do we mean by that? I think it's going to be. I think we've seen a lot of certainly from my perspective, we've seen a lot of people obviously working remotely within the construction industry in terms of organisationally, and it'll be interesting to see how much of that carries on post lockdown, effectively, whether people are expected just to be travelling around as much as they were previously, or whether actually it helps the industry to think about, yes, we'll meet, we'll talk, we'll have these, we need a site meeting, but we don't necessarily need to have every meeting on site, and whether actually we'll be working more efficiently going forward, whether there are lessons that we can learn from things going forward. In terms of activity on site, I think there is a concern that obviously we've had restricted on-site operating over the last few years, and I think that does seem to have been tempering the pace of output recovery as opposed to increasing sites. So you can open up those sites, but how quickly you can operate, how much work people you can have on those sites is a sort of a brake on growth. We're interested to see whether that improves going forward, or then we have the problem with materials that we're talking about that frustrate that.
Yeah, I mean, I had an interesting conversation with an MD of a contractor last year. I won't mention who it is because of what I'm about to say, but he told me that they'd put several staff on furlough, and then business picked up again quite quickly, and they were able to carry out their business with less staff. So they've actually become more productive and more profitable, which probably meant that some of the people that were on furlough actually were going to end up being made redundant.
Yeah.
And I think that was an interesting story. So businesses have been able to, under the umbrella of the furlough scheme, actually readdress the structure of their business. So
yeah, well, certainly, it was interesting on the face of it. I just did in our latest review, monthly review. I just had a look at the sort of construction output figures the government publishes, and also the employment and furlough data. And obviously, we still had about 20% of the workforce on furlough, but that, just looking at that, it suggested that our productivity as an industry had gone up by something like 8 or 9%, which is incredible, really, when you've got, as I say, you've got different types of working and that sort of thing. So whether there was a quirk in the numbers or whether it's actually recording something, it's definitely an interesting one to watch, I think.
Alan, we've got two more questions, so we'll rattle through these because time is running out. So let's go to the next question, Abraham, please. How much do you think increasing environmental issues will impact sector growth? E.g., the government has pulled back on hospital contract award to consider this.
It has gone up the agenda significantly. It's just how quickly can the industry, the industry, the desires and so forth, adjust to make sure they are getting incorporated in better design. I think the industry's got to adapt to it. I'm not sure how much of a general break is going to be on the pace of recovery. I think there's other factors in the short term that are going to be playing their part. But you can imagine that if actually, as you were saying earlier on, if it actually means that actually there's suddenly a sharper demand or greater demand for particular types of materials or design solutions, that could cause additional bottlenecks in the supply chain and activity.
I ought to express an interest here because I've just been appointed to the Construction Leadership Council Net Zero Board. So I think you're going to see quite an increase in acceleration in the net zero agenda over the coming months, if we have the same effect we had with the site operating procedures and the roadmap to recovery. Right, last question then, Abraham, please. Then I'm going to quickly, we'll put up a survey and so on. But let's, so Barclays Boss predicts biggest economic boom since 1948. Yeah. Could your positive forecast potentially be underestimated even?
It's potential, as I said, it is potential. We've underestimated it a little bit in terms of the sort of the pace of growth. We had those two alternative scenarios, but I think we're calling it about right in terms of, as I said, the Barclays Boss comments this morning. I think in percentage figures, the growth in the economy is going to be quite staggering, but you've got to think about how much we fell last year. So we still won't be back to where we were at the end of last sort of 2019 by the end of this year. I think it's going to take a couple of years to get there. So yes, I think it's a really positive thing, and it'll be interesting to see how quickly it unfolds. I think one of the things that a lot of the economists are picking up on is that there's a lot of consumers that actually haven't spent as much money. They've got much stronger cash balances than they would do normally, and it's been described as it was pent-up spending.
Yes.
Yeah, I'm not sure whether it is pent-up spending. I mean, if it's money you didn't spend down the pub last year, for example, for the previous on sort of leisure activities, does that mean you're going to go to the pub twice a week rather than once a week going forward? I don't know.
It might mean you spend it on something else. Anyway,
yeah.
On that note, Alan, can I thank you sincerely for giving of your time and your knowledge? Right. It's been really well appreciated, as you can tell from the questioning. Would you kindly, ladies and gentlemen, like to go to slido.com one more time, put the code in there and just fill out the survey because we take your comments very seriously. It does help us plan for the future. Also, don't forget, if you want a CPD certificate for what you've heard for the last hour, you need to go to www.mypropass.co.uk, and there's the code on the screen, CE-482. Without further ado, one more set of thank yous to Abraham and Howard at Leaders Meets. The time is exactly 1 o'clock, so I'm going to wish you a very good afternoon, and I look forward to seeing you all again next week when we'll be talking about mental health. Thank you very much, and good afternoon.
Thank you.